Let's welcome on board Deepan Mehta, Director at Elixir Equities. Deepan, hi, thanks so much for joining us. Give us a sense of what you make of this counter because Ola Electric has been vulnerable to a lot of volatility just in the last couple of weeks. So tell us what you are making about this counter, and fundamentally, how does this stock look to you?
Good afternoon, and thank you for having me on your show. One cannot really comment exactly why the stock is up 20%. There's no specific fundamental news which has come to my notice, at least, except that they are keeping on launching new models and they're addressing their complaint-related issues. But apart from that, I don't know why the stock is up 20%. But I can say one thing that even at these levels, the stock is extremely expensive. And the losses, when they will recover from that loss situation, is very difficult to say. In my estimate, the turnover may need to go two or three times from these levels before they can try and break even as well. And that's not something which I've done a very deep analysis about. So, given that we are in a kind of a corrective phase in the market, and given also the fact that this is not a platform business, there are a lot of high variable costs over here, and there's also a lot of competition coming in for Ola Electric. Keeping all of that in mind, I would just like to avoid the stock at this point of time. Typically, you want to buy into good growth stories which are solid in the black and which have got less uncertainty as compared to Ola Electric. So it's an avoid from our point of view.
Right, that's an avoid, and the fundamental factors that Deepan is highlighting is key to note because it seems like the risk on trade is back in the markets because a lot of these stocks from the broader markets are doing pretty well today. But let's understand more that on the technical front, how is the setup for the markets right now? And Kunal, very good afternoon. I would like to come to you. Almost 100 points gain for Nifty 50. Nifty Bank 183 points of gains for the last 1 hour. How do you see the setup and the movement in the markets?
I think it's been an okay day for the markets. Third day of the index consolidating, but the bias has been positive when we look at this over the market breadth, over the sector approach, the sector moves, the stock specific follow through, which we're seeing for individual names. So I think that's a sign of strength coming out for the index on an overall basis. The good part about the markets is that it's the expiry week, so there are bound to be activities which is going to impact rollovers for the index. And so far in the last 2 days of this week, we've seen that the short rollovers for the indices, both the Nifty and the Bank 50, is to a much lesser extent than what it was in the last many weeks of the markets going to a corrective phase. So which means that the markets are entering into the December series or likely to enter into the December series on a much more lighter note and not heavy on terms of the shorting side. Now the other factor to look out for is the dollar index, which over the last 3 to 4 days has been falling from 108 to 106.4 now. That is also aiding the market rally. So my sense is that if the dollar index falls below the 106 mark, I think we could probably get a further leg up of another 200 points at least on the Nifty over the very near term.
Okay, so that's Kunal's view. 200 points uptick expected on the Nifty. Nuresh, will come to you also for your view on the markets. But before we do that, here's an exclusive story. The Oil Ministry is pushing to bring natural gas under the GST wing and has approached the Finance Ministry amid reduction in the APM gas supply to city gas distribution companies. My colleague Prakash is here with some very exclusive details on this story. Prakash, hi, thanks for joining us. Take it away.
Yes, an important development coming in as we are learning from our sources that the Oil Ministry has made a fresh push to bring natural gas under GST. We are given to understand that the Oil Ministry has approached the Finance Ministry again amid a reduction in APM gas supply to city gas distribution companies. As you are aware that the government has cut APM gas supply by up to 20% to city gas distribution companies for 2 consecutive months, which has forced city gas distribution companies to approach government for a long-term solution. And therefore, Oil Ministry has sought the inclusion of natural gas under GST to ensure affordability. In fact, active deliberations are taking place with all the stakeholders, and various meetings have been held over the last 2-3 months. Along with that, we are also given to understand that the Oil Ministry has provided additional data to the Finance Ministry on its impact. And the good thing is that the major states, including Gujarat and Maharashtra, have agreed on the proposal, and the Finance Ministry is working on the proposal to present it before GST Council. A very significant development coming in. Sources are also saying that the idea is to bring natural gas and ATF under a GST in a graded manner.
Thanks, Prakash, for all of those details. Exclusive word coming in from sources. There's a push to bring natural gas under the GST ambit. Let's see what happens on this front. But let's keep it going about the market discussion that we were having before Prakash joined us. And Nuresh, coming to you now, also give us a sense of what you are making of the markets and particularly about the broader market space. Because if you take a look at small cap index, it's been consistently outperforming the mid cap as well as the benchmarks over the last couple of trading sessions. Tell us if you believe this rally that the small caps have seen is going to sustain, how sustainable is this going ahead? And or otherwise, do you think the large caps are once again going to attract all the bull attention again?
So, if you look at the last 3-4 sessions, we've seen a strong recovery in the small cap index. We've seen even today it's a 1% plus point move. But in the previous fall, where we started from, say, 7th of November, the Nifty was closer to 24,500 around that price point. In that dip towards 23,200, we saw a larger fall in small cap index. So even now, we are still away from those levels, whereas the Nifty has covered 24,330 odd levels. So for now, it is just a catch up for the overfall we saw in the small cap. But today, the most important part is if you look at the breadth, we have a very strong breadth across the board. The Nifty may not show more than 100, 150 point tick, but if you look at the broader markets, we've seen a good move across the board. So the bias is positive. The next price point which we watch out for is 24,500, 600. And if we sustain above that, then we take a test to 25,000, 25,200. And 24,100 now becomes a critical pivot point for the near term.
All right, that's the take on the mid and small end of the market. But Kunal, a couple of these PSU names have started to bounce back, and specifically from the likes of BEL as well as NTPC. So any of these stocks looked attractive to you, or apart from these two names, any stock that you would like to point out?
Yeah, so BEL is attractive. BEL, BHEL, I think these are the two names which are looking quite attractive on the charts. We've looked at the PSU banking lot, and that's another pocket which is also looking attractive, right from the likes of the stronger names, SBI as well as Bank of Baroda. And now you're seeing many of the mid-cap end of the PSU banking lot, Union Bank, etc. These stocks have also started to look very attractive. So as a basket overall, what happened was over the last 4-5 months, from May or June somewhere, many of these PSU banks, PSUs, they topped out. There was a correction of 40-50% for many of the PSU names. The likes of defense stocks, for example, and then there was a slew of correction of 20% odd for many of the PSU banking names. Now it looks like that a major part of the correction is out for these stocks. We've seen base building happening for many of the names. They were struggling below their long-term moving averages for quite some time. Many of these stocks have made a comeback towards their long-term moving averages. So when we look at this as an overall pattern, it looks like that the PSU basket on an overall basis is making a very strong comeback. My bet would be probably on the defense pack, as more of high beta pocket from here on. I would probably expect the likes of BEL, HAL, even the other stocks like Cochin Shipyard, Garden Reach, etc. These stocks should fare pretty well for themselves. And from the PSU banking lot, I think SBI and Bank of Baroda could be strong leadership moves even going forward.
Okay, so a couple of names that Kunal is liking from the PSU basket. Dipan, tell us if you agree with this view, how would you play the entire PSU space? And after the recent correction, do you believe that now this space is starting to look attractive from a medium to long-term investment view?
I think investors who are underweight PSU, whether it is banks or defense companies or engineering companies, I think this corrective is a good opportunity for them to get at least equal weight as far as PSUs are concerned. I think that over the medium term, 3 to 5 year view is very positive given stability in the government and what we have seen in Maharashtra as well. And the trend which we have seen for the last 4 or 5 years of PSUs going from strength to strength, that trend may also continue. But it's important to get into these counters at the right prices. I think a lot of defense stocks have certainly corrected significantly. One could look at those, counters as a good entry point. With usual disclosure, I think whether we and our clients are invested, the best pick amongst defense still remains Hindustan Aeronautics and Bharat Defense, high-tech companies with great order book and earning visibility. And within the banking space, if investors are underweight the banks and they need to get equal weight over there, then I would say that SBI and other tier two PSU banks, I think, may offer better risk return profile and maybe higher returns as compared to some of the larger private sector banks or some of the other larger NBFCs also.
Okay, so that's the view coming in on the entire PSU basket. Deepan, thanks for sharing your view, at least on the defense pack as well as the PSU banks. But while we are speaking of government capex and the new coalition government's focus areas, Nilesh Shah, MD at Kotak AMC, says that the focus needs to stay on land, labour and farm reforms if India wants to grow in double digits going ahead. Let's go across to listen in as we slip into a very short break.
Undoubtedly, we have moved from majority government to coalition government. And under coalition government, certain things will continue to happen, like digitization, like defense and R&D spending, like infrastructure. The focus will also be on employment, skilling, housing kind of things. The good part was that at the center level, fiscal prudence path was maintained, and next year's target of 4.5% on fiscal deficit is a very good target. However, as coalition government, there are certain things which will not be accelerated. For example, strategic divestment looks a bit difficult. Land reform, labor reform, farm reform, judicial reform, these are also likely to be on slow track. So the hope is that with this kind of mandate, government gets the courage to fast track those reforms. With the work which is being done, we are good to get 5, 6, 7, 8% GDP growth on a sustainable basis. But if we want to emulate China, if we want to grow into double-digit growth, then basic reforms around land, labor, farm, and judicial is necessary.
Let's put the spotlight on the capital goods space because the earnings are through. So let's try to draw a comparison between the capital good MNCs. We have Cummins, ABB India as well as Siemens on the radar, and Ria is here with a comparison that she has done. Over to you, Ria.
We have all the numbers for the MNC capital goods companies. Overall, the numbers have been good for Siemens and Cummins, while the numbers have been a little weak for ABB in this quarter. Now, Cummins has seen the highest revenue growth in this quarter of around 31% on a year-on-year basis, which was backed by healthy domestic demand, even though the exports remain muted in this quarter due to the geopolitical tensions in the Middle East and West Asia. In terms of EBITDA growth as well, Cummins saw the highest growth on this front as well, around 41.8%. If you talk about the margins, Siemens has seen the highest margin expansion in this quarter of around 247 basis points, which was likely driven by the better pricing power and product mix in this quarter. Even on the net profit front, Siemens has witnessed the highest growth of around 45.4%, which was largely aided by growth in other income in this quarter. If you talk about order inflow as well, even on this front, Siemens has outperformed. We've seen a growth of around 37% on a year-on-year basis versus just about 11% for ABB. For Siemens, the growth was backed by healthy demand across all business segments, although in the digital industry segment, we continued to experience some normalization in demand in this quarter. And for ABB, the orders were led by the electrification segment. So that is how the numbers are stacking up for the MNCs in this quarter.
Well, thank you so much, Ria, for drawing that comparison for all of us, that how these capital good companies and especially the MNCs have performed in the quarter gone by. But sticking to Siemens then, there's one more report that is putting the spotlight on Siemens, and that is coming from Phillip Capital, where they're saying that the parent company, that is Siemens AG, can actually look for, there is a possibility rather for some stake sale in the times ahead. What they were trying to highlight is that all these AMCs in the recent past and the parent one have actually gone ahead and offloaded some of their stake in the Indian listed company from the likes of Hyundai Motor. There was an IPO that we have seen. Even in ITC, BAT has reduced the stake, and maybe there could be some stake sale. There is some possibility of an overhang there because the parent has said that there's a substantial financing potential from the sale of the shares, and Phillip Capital believes that the 10% dilution can actually fetch $3 billion for the parent. So on the back of this report, this counter is in focus, but that's a development that we are tracking, whether or not this happens or not. But parent has not ruled out the equity stake sale, though they have not specifically pointed out the Indian listed entity. But Dibin, I wanted to have your take on the earnings then. How do you see the earnings of all these MNC players and any of the top bets that you have in this particular sector?
Basically, these counters are quite tight in terms of liquidity, and there's a great deal of scarcity as far as the floating stock also is concerned. And historically, for the past several decades, they've always been trading at very high P multiples, which is why we've always kind of avoided them. But end of the day, they have given great returns, and investors are always impressed by the corporate governance standards and the positioning and the kind of technological edge which they have. But from a fresh investment, I would avoid existing investors, be it ABB, Hitachi, also Siemens. All of these companies, I think, as existing investors, you may remain invested. But I don't think this is the time to take a fresh investment. These are great stocks to buy when there's a down cycle in the capex cycle, and these companies are the earnings are stagnating or even growing negatively. But not at these times when the stocks have rallied as they have, and we are in a very, I would say, strong capex cycle. So for now, it's a hold for us.
Hold call coming in from Deepan. Deepan, thanks so much for joining us on the show and sharing your outlook on sectors as well as the overall market. On that note, we'll let you go. But with that, Kunal, let's come to you for your closing trade. Tell us what's looking good on the charts to you.
Yeah, so I think Jubilant Food is a very interesting chart shaping up. The stock now trading around the 645, 650 levels. It's forming a bullish flag formation on the charts. Very attractive volume patterns for the stock in the last 3-4 days. So would look out to be very bullish on Jubilant Foods over the very near term.
Okay, Jubilant Foods looking good on the chart for Kunal. Nuresh, what's your closing trade coming in for today?
So that would be a buy on Syngene. The stock looks promising in terms of the momentum breakout, which has done in the last few sessions. Not far away from an all-time high of 945, 950. Looks set for a fresh move to a new all-time high.
If you like this video, then like, share and subscribe to ET Now.